John Hilsenwrath just got out of the room where that press conference was. He's the Wall Street Journal's chief economic correspondent and arguably the best reader of the tea leaves at the Fed. John, right to it. What jumped out at you here?
Well, what jumped out at me is that the Fed is becoming increasingly uncertain about where rates are going, not just in the next few months, but over the next 2 or 3 or even 4 years. The real motion in today's whole press conference and the statement was that they lowered their projections for where they think rates are going to be in the long run. They lowered them down from 3.25% to 3%. They lowered their projections for where they think rates are going to be at the end of 2018 from 3% to around 2.25%. And they lowered their projections for where they think rates are going to be at the end of 2017.
John, John, how can they see that far out? That sounds crazy to me.
This is my point. No, this is my point. In addition to lowering all those projections, Janet Yellen said she doesn't have any confidence that those projections are right, that they might end up being even lower than what they're saying today they're going to be.
Look, this is worthless idiocy. Dot plots out to 2018. They can't even forecast next year. They have changed their economic forecast and have been wrong time after time after time since 2009. The problem is the model is broken. We're trying to run monetary central planning. We're trying to run an 18 trillion economy here and an 80 trillion economy in the world by the crude instrument of pegging interest rates. It can't work. These people are basically getting in harm's way. They're destructive, and they have a vastly exaggerated sense of what they're doing and the impact they're having. This is dangerous. This is a very dangerous time.
Go ahead, John.
I just want to say one thing. Is I know there's a lot of people out there very frustrated with very low interest rates, but I think we also have to think about the counterfactual. What would the world look like if the Fed went ahead and raised interest rates? Well, unfortunately, they have a model for that. There have been a number of central banks since the financial crisis in 2008 who have tried to raise interest rates. The ECB tried to do it. There was a big fight in Sweden when they tried to do it. The Israelis tried to do it. And you know what? Every single central bank that's tried to raise interest rates in this environment has had to turn around. And let me just finish this point. A number of those central banks have now gone into negative territory. The economy is not bearing higher interest rates.
That is not true. They are cowards. What happened was there's a hissy fit in the stock market.
Okay.
The gamblers and traders reject it.
Let Michael Cox in. Go ahead, Michael.
Reason why they should back off.
Go ahead, Michael.
That's right. Look, if I've been on drugs for the past 2 years and you start taking me off drugs, methamphetamine monetary policy, and you take me off the meth, I'm going to feel bad for a while.
Right.
And if you don't persist with the cure,
you're going to kill me.
Then you don't get better. You just get sicker with the same thing over and over again.
Well, I mean, the only counter-argument I would make to that, sure, yeah, the markets react negatively, but when you look at, the central banks are trying to get 2% inflation. When the ECB, when the Israelis, when the Swedes, when they all tried to raise interest rates, inflation started sinking. They got farther away from their 2% inflation targets. So
guys, and by the way, can I just jump in here? We are losing steam with the markets right now. It's as if, with about 22 minutes rather to go before the closing bell rings, we have suddenly lost about, I want to say, 55 points of the gains throughout the day. We are diving at this moment, and I'm looking at this and I'm thinking to myself, David Stockman, investors are throwing their hands up. They don't know what to do. I do want to make this point, and I don't think he'd mind. Todd Horowitz, our trader, we know him well. He was in the green room, and he was on the phone. He said, Liz, right now I am selling futures. I am selling into this rally, and that was about 40 minutes ago.
Listen to Yellen for a few minutes, and you realize they're clueless. They have no idea what they're doing. They have no idea where they're going. We have gone 6 years now with this policy, $3.5 trillion of monetization. It is, as I said, zero interest rates for 90 months. It's not worked. So therefore, anybody who's thinking about this should say, This is dangerous. Get out of harm's way.
With all due respect, and Michael, I want your thought on this. You're leaving out of the account the fact that there's some great American businesses right now that are less expensive if the stock market is selling off today at the moment. And we're not quite selling off. The Dow is still up 10 points. But there are still great companies with good yields. So why should we listen to David Stockman and get out of all stocks?
Oh, I don't think you need to get out of all stocks. I think you need to very carefully choose those. But look, here's the thing. If the Fed is going to raise rates, my analysis shows that each 1 percentage point increase in, say, the 10-year T-note rate will eventually take the market down 10%. So if the Fed starts to raise the entire yield curve up, and they're going to start it with the low end first, of course, once they do that, there's going to be a stock market effect. There always been, with 116 years of Dow history, suggests that they will affect the stock market. There's a bubble in the stock market owing to Fed policy.
John Hilsenwrath, right now it looks like the S&P is about to lose all of its gains, and I'm just wondering your thoughts on what might have happened in the last 20 minutes since she just stopped speaking.
You know, I think the market is internalizing Janet Yellen's own uncertainty about what is about how this economy is developing and where Fed policy is going.
Well, look, we got to a
if she says uncertainty a dozen times in a press conference, then the market is going to internalize those words, and I think that's what we're seeing.
Did you count?
I didn't count. That was an estimate. Don't hold me to it.